Hello, everyone. Welcome back. And Connor, thank you for joining us again.
Thank you for having me, Scotty. How are you?
I'm very well, guys. And if you are new to the podcast, Connor and I, where we talk Forex, we talk charts. And before we get into everything, we're going to have to do a little bit of a risk disclaimer, as it's very important now as well, because both Connor and I are actually trading live accounts. So you'll see chart analysis, you'll see us talking about potential trades sometimes. Please realize that both Connor and I, we're not professional financial consultants, and we're not giving you advice on what to do. So please, it's more of a learning thing and for entertainment purposes. But if you're trying to learn Forex, demo trade and backtest, don't just live trade, because that can get pretty nasty pretty quick, to be honest. So, as we both know as well, Connor.
I concur.
Yeah. All right. Anyway, guys, so we've got the Euro Swissy daily up here. And so, Connor, you got in. When did you get into this one? Earlier this week?
Yes, I got in like 2 days ago.
Yeah, two. Yep, yep,
Yeah, something like that. Yeah, 3 days ago. So third candle.
yeah,
Once it's broken out of the box,
yep,
and you can see I've put a green box around. For those who don't know, that's just my box trade. That's just where I find some little bits of support and resistance that have been constantly touched, and then once it
yep.
breaks out, boom, I'll take the trade. And so let's just see how this thing goes, Scotty. That's all I've really got to say about it at the moment. I can elaborate on it if it's going up or down a little bit later, but it's pretty early days for the trade at the moment.
Yeah, and guys, if you are interested in following us with our trades, the best way would be at Trade Talk Pippin on Twitter. So at Trade Talk Pippin, all one word, all lowercase. So that would be the best way to get a bit of an in-depth understanding of what we're doing in real time as well. So going from that, we're going to the pound Aussie 4 hour chart now. And I got in, when did I get in here? So I got in on the 27th, so that was a few days ago now, or a couple of days on the Tuesday. I got in very early in the morning. It was the New York session was coming to an end, and it went up pretty nicely. And I was looking for a mild retracement, because it has actually recently gone up, quite a lot. And I knew 1.84 was a bit of resistance, and I got in near the high of the candle. And look, it's pulled back quite a bit. It's currently unrealized. It's negative 0.8%, so nothing really to get concerned about. But on the screen there, guys, you see a solid red line. That's the stop loss, and it's quite wide. So the stop loss is at 1.81772, and the entry price was 1.8460. Currently, it's around 90 pips in the negative. And for some people who scalp and might do 1 minute time frame trading, they'll be like, wow, that's so much. But it's actually not too bad. It's not even halfway to the stop loss. So for me personally, I use a 55-day moving average as the stop setting, and then I will move things once they go to 1%. I'll move to break even, and then I'll just sort of trail it really, and then eventually it will come to an end once it hits the trailing exit. So, but currently, I would say this is not terrible, but it's not healthy. I mean, this sort of breakdown, but
So
no.
have you got the Bollinger Bands up on your
No,
phone?
I don't. I've got the OANDA FX trade thing just because it shows my current unrealized profit. But I could bring up what I'll do, guys. I'll bring the other. So I use for charting. I use MT4. OANDA FX trade is for that's for actually taking the trade. So, guys, I've got now my actual screen that I'll be looking at to see a potential setup. So we'll get the pound Aussie up. We'll go to I use a 4 hour time frame. So I got in at this high here of this candle, and it moved pretty nicely. And and it was contained. It doesn't, when it bounces out of the Bollinger Band, it's not really a concern. It's more, when it sort of expands a little bit. And it did. And obviously the 55-day moving average is above the 200, which is what I look for. I knew there was a little resistance at 184, but it actually went through that pretty nicely. But it has retraced, and you might be thinking, Scott, this is going to continue downwards. The reason the stop loss is wide is just because things take time to develop. for example, the Euro Aussie, I'll bring that up. This is a pretty good example of something that looked terrible and then sort of actually came out all right. So I'll bring that up on the other chart here just to show you. I have to go to the daily because the screen is too small to actually show when I got in. But I got in on the 9th of February, and the sideways price action it was like up, down, up, down, up, down. And then it went up again, then went down again, then it just sort of surged upwards, and it's looking okay, and I've locked in around 2% here. But, who knows where it's going to go, and both Connor and I know some people like to close out very quickly. That's fair enough, but then you have to let your winners go significantly, because if you close out all the time and you've got a low win rate, the problem is most people like to close out too early if they're in a little bit of profit. So my method is just to really let the trend develop, as you can see the Euro Aussie is doing. Who knows? This might be the top, but I don't anticipate. So that's my conclusion to that, really.
Sorry to interrupt you there, Scotty, while you were on a roll. But with the Bollinger Bands, what do the lines represent? Are they all different moving averages, or do you know how it actually works?
So with the Bollinger Bands, it's a 2 standard deviations. So when I'll bring another chart up. I'll bring the pound Aussie up. So when it goes outside of the top band. So the middle band is I think the middle band is a 20-day moving average. I don't really pay too much attention to the middle band, but if it goes and it sort of pops out of the top of the band, that means it's gone 2 standard deviations from the median. So I look to that for it's more of a breakout. Yeah, it's actually similar to yours, but I don't necessarily do a box and wait for it. I sort of look for a bit of a break out of that, and then making new highs, and then I set the stop, which is typically pretty wide normally, and then I go a few pips above the high, so I wait for the candle to close normally. Sometimes I might deviate from that if it's near, going to close in a few minutes, and then I sort of let it go, really. And I won't, if it doesn't trigger the next candle, I'll close the trade. I don't know about your thoughts on that. What are your thoughts on that? Like, how long do you keep?
Yeah, so it's different for me with a box trade because I just take it. So I don't have it. So when Scotty means trigger, he means he puts a pending order in.
Yep.
I've just put a market order in. However, I'm the same with if I take a big shadow or a kangaroo tail, I put a pending order in.
Yeah.
I might, if the candle next to it was just like a real wicky candle that didn't decide anything. Then I might leave it for the next candle. However, if it's a candle that has like a big body, it's gone the opposite direction, I'll get out. But that's sort of like one of the my caveats I have.
Yeah, and that makes sense. So what Connor's sort of saying is, so the candle, that slightly red bearish candle that got you in, that didn't concern you too much, really. That was sort of a minor.
Because the breakout candle had such sort of conviction.
Yeah.
It didn't, the whole body basically was a long engulfing candle.
That's good.
Now, if that had a bit of a wick on it, if it had a bit more of a wick on it, say 10% of it was wick, I probably wouldn't take it.
Yeah, so
because I would think that's an indecisive. That's not really like a good breakout candle that I like.
Sort of like the candle 2 across to the right there, that it was quite wicky. That obviously, you wouldn't take the trade if it closed like that. You would wait for the next few candles to try and get closer to the high.
Yeah.
Okay.
Yeah. So, if you have a look at the actual breakout, maybe 2% of the whole candle is wick, 1%. When I take those sorts of, if I take those sorts of breakouts, at the same time though, it's broken right out of the box. Like if it really took off, there's a couple of things, but I'm quite strict on the breakout candle. I like to be quite strict on the breakout candle. And then, you sort of rate something out of 5 because that has such a good, you can see how it has a couple of wicks hanging out of my box. But because it had such a good breakout candle, I took it.
Yeah, I was going to say it's very convincing, and it's sort of, Yeah, and it closed. What Connor's referring to, guys, is you can see the close of that candle is very near the high. So that's a good indicator of, that there's bullish momentum there. But again, it's not perfect. As you can see how this chart has moved about, it's never really gonna just take off and go to the moon straight away. There's going to be pullbacks. I mean, the Euro Aussie is a good example of. I mean, that's particularly volatile and a good. I mean, and what that represents there is that was quite close to my stop loss originally when it started going sideways and was going up and down, and I was just like, that's, you don't. That's the thing about you. I know some traders have a rule. They close the trade out if it's 80% to the stop loss. If I had done that though, I would have kissed goodbye, 2% or more. So, you've just got to sort of deal with risking a certain amount of money that you're comfortable risking. Don't sort of do 5, 10% because you're going to find yourself a bit stressed. Yeah, I know some people. Oh, what else is there? The martingale method. That's pretty crazy. Is
Yeah.
that where you
Well,
double?
that's the gambler's fallacy.
Yeah, it is. Oh man,
In theory, to do well out of that, you need an infinite amount of money.
yeah,
Because there's nothing to say that you wouldn't have 13 trades go wrong. And you've seen in my back testing before, in my demo last year, I had
yeah,
like 15 trades that went
yeah.
against me at one stage.
That's a good point. Okay, you gotta. It's all probabilities, and you just have to have risk that allows you to survive certain times when it's. Especially for me this month, it's been a winning first trade, then it was a losing second trade, then it was a break-even trade, and now there's the pound Aussie, which is nothing special, and then the Euro Aussie, which is it's moving pretty well. So it's up, down, up, down. You have to deal with very few systems, unless it's like a very low time frame scalping method. They can get pretty good win rates, but obviously, if anything negative really badly happens, if you get gapped or if a significant news event happens, you've got such a tiny room to move and risk of error, it can really do a bit of damage. So you've got to sort of understand that, guys. If it's a big candle moves quickly in a 1 minute chart, it might be only a few pips, but if you're risking like one lot, that's not, that's going to cause a bit of damage quickly. And then you feel terrible, and then you'll revenge trade, and, just can get quite ugly. I just saw the clock. It's about 12 and a half, Connor. Was there anything else you'd sort of.
As always, Scotty, you've hit the nail on the head. I think that's about it.
Yeah, so guys, thank you for watching. This is the angle we're taking with, we're going to focus on systems and discuss in detail a certain trade. Please feel free to leave a comment. And to the people who've watched it on the Forex Asia trading page, thank you. And to everyone else, thanks for watching. But Connor, thanks for joining us. Until next week, happy trading, guys. And bye for now, guys. Thanks for watching.